Have you ever believed that keeping money in the bank helps it grow? Well, here's the truth. While your money might grow in numbers because of interest, it's actually losing value because of inflation. Shocking, right? Every day, your hard-earned cash sitting in a bank is quietly losing purchasing power. But don't worry. In this video, we'll show you 6 powerful assets that will protect your wealth, help you beat inflation, and build generational wealth. Stay with us till the end for actionable tips and smart investment strategies. Let's dive in. Ever wonder why the rich always invest in gold and silver? Because governments keep printing money, causing paper currency to lose value. But precious metals like gold, silver, and platinum, they stay valuable because they're rare and can't be printed. In the 1950s, an ounce of gold cost $400. Today, it's over $2,000. Experts predict it could hit $10,000 by 2032. That means your gold investment could multiply by 5 times in just a decade. Precious metals also act as a hedge against economic crises. When stock markets crash or inflation spikes, gold prices tend to surge. This is why financial experts like Warren Buffett recommend having some gold exposure in your portfolio. How to invest? Don't want to buy physical gold? Try gold ETFs, which let you invest in gold without the hassle of storing it. Another option is investing in gold mining companies or gold-focused mutual funds. Pro tip for you, keep 5 to 10% of your investment portfolio in precious metals for long-term wealth preservation. Did you know silver is essential for electronics, medical devices, and even nuclear reactors? Or that cobalt and nickel are crucial for electric vehicle batteries? Cobalt's price doubled from $20,000 per ton in 2012 to $40,000 in 2022. Demand is expected to grow further as electric vehicles become mainstream. Copper is another essential industrial metal, with demand projected to surge due to renewable energy projects. How to invest? You don't need to store tons of metal in your backyard. Instead, invest in mining companies' stocks like Rio Tinto and BHP Group, commodity-focused mutual funds and ETFs, derivatives such as futures and options if you're an experienced investor. Pro tip for you, focus on commodities with rising industrial demand to ensure long-term portfolio growth. When the world shakes, where does the money go? To safe haven currencies like the Swiss franc, British pound, and Chinese yuan. For example, during global crises, the Swiss franc always appreciates. In 2023, 1 Swiss franc was worth $1.1074 USD, making investors wealthier overnight. Safe haven currencies offer stability because they are supported by countries with strong economies and stable political systems. How to invest? You don't need a Swiss bank account. Simply invest via currency ETFs that track stable currencies, Forex trading platforms like Forex.com with just $100. Pro tip for you, allocate a portion of your investments in stable currencies to reduce overall portfolio risk. Check your dollar bill. It says, "This note is legal tender for all debts, public and private." This means your currency's value is tied to your government's strength. Investing in government securities like US Treasury bills, bonds, and notes gives you safe returns. The best part? They're backed by the US government, one of the most stable in the world. How to invest? Purchase directly from the Treasury Direct portal. Invest through secondary markets and bond ETFs for liquidity. Pro tip for you. Treasury bonds are excellent for conservative investors seeking steady returns with the minimal risk. Want higher returns than government securities? Value stocks are your answer. Unlike risky growth stocks, value stocks represent companies with stable demand. For example, industrial metal companies like Nucor provide steady dividends and growth. Some value stocks are from sectors like utilities, consumer staples, and industrials, which perform well in all market conditions. How to invest? Research and pick individual value stocks with strong fundamentals. Invest in dividend-focused mutual funds like the Vanguard High Dividend Yield Index Fund. Pro tip for you, reinvest dividends to accelerate wealth growth over time. Land and real estate. Land is scarce and always in demand. From homes to factories, we'll always need land. Real estate prices have tripled between 1992 and 2020. Residential homes, office spaces, and commercial properties are excellent inflation hedges. How to invest? REITs, Real Estate Investment Trusts. Invest in real estate with minimal capital. Rental properties, borrow to own properties. Rent covers expenses and mortgage payments. Collectibles, vintage cars, rare art, luxury watches. These aren't just for the ultra-rich. A 1955 Mercedes-Benz recently sold for $135 million. Leonardo da Vinci's painting Salvator Mundi sold for $450 million in 2017. How to invest? Use online platforms like Masterworks for fractional ownership in art. Explore marketplaces for rare collectibles like baseball cards, comic books, and luxury goods. Pro tip: focus on collectibles with historical significance or cultural relevance. So there you have it, 6 powerful assets that will protect your wealth and help you build a financial legacy. Stop letting inflation eat away your money. Start investing smartly today. Which of these assets will you invest in first? Let us know in the comments. Don't forget to hit that subscribe button, give us a like, and tap the bell icon for more wealth-building insights right here on WealthWise, where your wealth grows wisely.